welcome back to the channel, welcome back to Vertex Investing. I hope that you're all keeping well, and in today's video we're going to talk about how to approach the market. And I think sometimes some of you may be overcomplicating it and probably need to break it down, break it down in a more simpler way. Now actually, before I go in the video, I just want to say again, as always, I want to take a moment to just appreciate everyone that's supported us, everyone that has has helped grow Vertex to what it is now. And I hope that the content that we're providing here on YouTube is providing some value to you guys, which is the main thing. But yeah, without further ado, I will get into the video. So this is a Euro Kiwi. Now, I don't actually trade this pair, but this is one that I'm observing at the moment, and it actually moved. Yeah, it moved really well. And this was a setup that I shared. Actually, I'm not going to show the Discord. It's a setup that I shared in the Discord. Oh, you had a bit of a dip here, but anyway, how did I approach it? Now, so when I actually came to the market, let's see. It was somewhere here. Okay, so at this point, this is the first thing that I saw. So the first thing I check on, which is my 4 hour, and that's my main time frame that I go to. It's just the standard one that I use. So at this point, what's the first thing you need to look at? So find your higher time frame bias. Now, I don't even trade this pair. I was just using it for analysis sake and just observing and keeping the skills there. So what do we see is we have a range from this high and this low. Yeah, that is the trading range. So far at the moment we are bullish in this case because we've just broken this structure, right? But if we see what's happening here, we've just broken bearishly. So what does that say? It's telling you that price is probably going to continue bearish at this point. However, it's not confirmed to be bearish until we get another break of structure. However, we can still convert this and trade based off it. We don't imagine waiting for another pullback in the weekly and then a break of structure. That'll take ages, especially the fact that this is the weekly time frame. But it's good to know where you are in space, so you know what range you're in, and you just broken that range, right? Next thing, you're going to go to the daily. When you're looking at the daily, what do you see? So you want to look at current price and try to understand what is going on, because you already know from the weekly that you've just broken bearish structure. So what's actually happening on the daily? So let's start from, I don't know, let's start from somewhere up here. Let's start from up here. What's actually going on? So if we're seeing what's happening here, from here, right? So that's a high. That high was created by this low, and then we had this big impulse down, create this low. Okay, then we had a pullback, and then create another low. Okay, so that was the high, and then we had a lower high, and then when did we break this low? We broke this low by this high. Okay, so overall we're still looking bearish, right? We created this low, then it pulled back, created this high, low. Now it created a new high, but does that mean trend is changed? No. Why? Because it's not confirmed by not having that second break of structure. It's not confirmed that price is bullish, right? So this is what we consider a liquidity grab, which is what I mentioned in all the videos, because what we can see is price continue to go bearish. Okay, so whatever was here, whatever causes bearish move has already been mitigated by this wick, and then we had another bearish break. So we had a bearish break, and we know that price is overall, well, the trend is overall bearish. So if we're thinking about it from this perspective, where does price need to come to? We do have this bullish candle. However, it's not the best, but we know that price came from this candle here, so we know there's an OB within here. So from where we are at the moment, we should expect a pullback and then a push further down, because that is what we're seeing. We're trading what we're seeing, right? So this is the basic breakdown that you should do at this point. Let me get rid of that. So then we go down again. We go down to the 4 hour. So we look at where we are now at this point. So when I was looking at this pair, what's actually happened? We've just broken this structure here. We've broken to go bullish. So what does that indicate to me is that we could potentially have a pullback, then continuation to the upside until we get to this daily order block, right? So this is essentially building a story for our counter trend trade. Okay, so what this is, as you can see, is relative equal lows. What do we know about that from the liquidity video? There's liquidity sitting there, so this is grab liquidity and gone, right? So we should expect a pull back and then continuation, and that is essentially what has happened. Now let's go to the hourly. Let me get rid of all the brushes. There we go. So if we're looking on the hourly, what's actually going on, it's a bit more clearer to see the liquidity grab. So we've got the relative equal lows. All these traders have just been crashed out by this one. Then we had this bullish break. Now to confirm the trend, we've had another bullish break, and then we have this unmitigated OB. Okay, we do have the order block here, which has been mitigated. So mitigation after mitigation, and then we can start looking for this trade at this point. So this is going to be your area of interest that you're looking for this pair. So we just built the whole story just by simply going from weekly, daily, 4 hour now to the hourly, and you can refine this even further if you wanted to. However, at Vertex we got a set criteria to actually look for the trade. I don't know why I did that, but we've got a set criteria to a 2-rule process to confirm the trend and to confirm our entry. Okay, and that's essentially what has happened, and that's what we did at that point, where the trade is currently running. To be fair, I hate this pair. It's got the worst spread. The spread was 1.4 pips, which is why I'm not using it, because it wouldn't allow me. Well, I mean, 3 pips for a buy would be okay, but I don't personally like it myself. It's currently running at what, a 1 to 5, and it's very slow. I mean, look when it triggered. When did it trigger? It's taken what, 4 hours 55 minutes to move 1 to 5. Is good. 1 to 5 is good. However, that's very, very slow, given the fact that it is bearish overall. And look at this bearish momentum; it's a lot quicker than this bullish move. Overall, this pair is just horrible. I don't like it. However, for the sake of analysis, it's very good to to see what's happening on other pairs. As you can see, my main watch list is this one, and then I've got this observation watch list, which I do for the students and have a look at each of these pairs just to see what's going on. Another thing I want to mention is, say for example, when you get a trade, for example, say you enter here. Wait, hold on, where was my entry? Yeah, the entry was here. All right, say the entry point was there and you just broken structure. Should you move your stop loss to break even? You can, but you need to think of the fact that we just broken structure. What causes break? It was this order block that was sitting here. So price has a reason to come back. So you moving your stop loss to break even is a bit risky, given the fact that price needs to come back, mitigate your OB before it continues that move up. So until you break this structure again, that's the safest bet when to move your stop loss to break even. I don't know what caused this. It's not even spread hour yet, but I don't know what caused this pullback here. And what did it even react to? God knows what it reacted to, but it must have reacted to something. But essentially, you wouldn't move your stop loss to break even at this first break of structure at this point, purely because that order block is clear. It's an empty order block. Well, not empty, it's an unmitigated order block. So should you move your stop loss to break even? What you can do is to obviously take partials at this point and leave your stop loss where it is. So even if it does crash out, you'll be out at break even. But you should be trading with confidence, knowing that you have an edge and knowing that you're following the rules. Obviously, if you're using the Vertex rules, but if you're not, then you try to work out how to actually enter here. Essentially, just work out the shift in structure and work out your own set rules if you can. But again, obviously, if you want to join Vertex and learn the 2 rules from us and learn how to utilize it in every single asset pair or stock, whatever you want to trade, obviously join the mentorship or join our bootcamp, which is on February the 20th and 21st. But yeah, if you want to know the 2 rules. But essentially, that's the whole breakdown. So if you think about it, there isn't really a lot to it. You just have to understand where you are in space, understand the ranges you are in. I did realize I didn't really speak about the ranges apart from the weekly range. We know that the weekly range is we know that the weekly range is obviously from here to that low that caused that break. Okay, we just broken that range, right? So where did that break of this range come from? Where was the high that was formed? Yeah, so here. So that was the high. So the new range is from this high, this lower high, sorry, to whatever low gets formed here. So currently is wherever price is at the moment. On the daily, our range is going to be, our range is going to be, let me get rid of all these. So on the daily, our range is going to be from this high to that low that's formed. On the 4 hour, okay, because we did break bullish, remember. So our range, if I get rid of the brushes again, there we go. So our range at this point is going to be from this low to that high. So that's our invalidation points. And then on the hourly, what we formed is obviously from this low to this high. Now, yes, we've broken the range, but at this point, you need to think about what's actually going on. You need to think what caused this move up. It was from this order block here, which is unmitigated. So price has a reason to come back, and that's where what's going to happen is, what can you see? You have relatively equal lows. What does that mean? Liquidity. Okay, what's this? 1, 2, 3, quadruple bottom. And then all those traders, that breakout traders, get stopped out, are going to get stopped out. These buyers here off the support level have already been stopped out. So the liquidity is being grabbed, it's reacted to this order block, and that is the whole story of the trade. So how to approach the market, it doesn't matter where you are, just understand where you are in space and understand the ranges that you're trading and understand the reasons why. Because if you think about it, that 4 hour range, right, is quite high, and we still need to be buying at the discount pricing. Okay, so ideally, with that being said, on the 4 hour, because bear in mind your higher time frame should be your bias, you should be buying from the extremes of your higher time frame, right? So it would make sense, and the confluences of the 4 hour and the 1 hour to buy from this area here. That wasn't a straight line at all, but essentially that's how you would approach the market. Okay, understand where you are, doesn't matter. So for example, when I first came into this, I was somewhere here. Okay, that's where I saw it, but my whole thought process was from the weekly, daily, 4 hour, then to the hourly, and then the entry was on the minute or 30 seconds, sorry. 1 minute. The entry was on the rule-based entry was on the 1 minute, and the entry OB was on the 30-second for this one, which I'm not going to show in this video, but that was the whole thought process behind it, and it was a very step-by-step process, and that's essentially how you guys should be adopting. Now, because of you guys, I have a bunch of brushes here, so I hope this video has helped. I understand it was a very quick one, but I'm just replying to a question that was being asked about how to approach the market, and how to set yourself up for it. So essentially that's what you need to do for every single setup that you take. You need to think about what's happening on a higher time frame. Where do you expect price to go? Because this is a counter trend. Okay, remember, this is counter trend because we are looking to sell. We are looking to sell from this order block here, right? Why are we going counter? Why are we trading against the trend? Because of this break that we've just had, and we've just confirmed a trend change on the lower time frame using our entry criteria rules from here, which is why it gives us a reason to buy towards our selling area. So we are buying to sell, okay? Because for price to come from here to, let's say, the open is 150 pips. Are we just going to let 150 pips just go without us being in it? That's a big move, and we can catch some really good risk to reward from this. I mean, if it gets up there, I mean, the risk to reward on this trade, what would it be? This is a 50 to 1 risk to reward should it get just to the open, and I don't know if it's going to react here. I'm not going to analyze it here, but whether it reacts here or not, I don't know. But that's the minimum point where we expect price to come to. So if you think about it, if we waited for price to come back and just following the trend, we're going to miss out on a 50 to 1. So that's essentially how to approach the market and understanding whether you're going to go counter trend or whether you're going to go pro trend. But for now, I will leave you guys be, and I hope that you've enjoyed the video. I hope these video series are helping you, and also feel free to let us know how you're getting on. Message us on Instagram or Telegram, whatever. And yeah, again, if you want to join the Vertex mentorship, feel free to join via our website. The link is in the description below. Also, feel free to join our bootcamp, which is limited spaces at the moment, is on February the 20th to 21st. If you use the discount code YT500, it'll give you £500 off the bootcamp, and with that you'll get full access to myself and the other mentors that we have, and yeah, and so on. But I'll leave you guys, and I'll see you guys in the next video.